When the stock market had its ups and downs earlier this year, there were some deals to be had, and Lyft might have been one of those stocks because not only could the stock be on its way up, it's also a company we think could be tariff resistant. I've said that before, and that ended up quite interesting. We'll talk about that a bit more. But here's the thing, they also just announced earnings about 5 days or so ago, and the stock did shoot up. So, is it the stock we should dig more into and consider adding to our portfolio? Let's go ahead and break it down. This is a video that you asked for in the comments, so we are going to analyze it. I'm going to give you 2 things on each side, really 4 things. So I'm going to go good, bad, that you should consider. It's going to be more of an analysis video. And again, because y'all asked for it, I'm really going to be looking at the view count and interaction. All right, if we get a lot of interaction, we can do more videos like this. If we don't, I'm going to take that into consideration. Okay, so I go off of what y'all say in the comments and how y'all react to the videos. I get a lot of analytics, and that's kind of how we decide what gets posted and what gets out there. All right? All right, so you got to like and subscribe and be up in the comments. Otherwise, it's going to be what it's going to be. All right, so let's start off with the good news with Lyft and what I'm looking at on the good side, and then we'll alternate going back and forth. So the good news is they had double-digit growth. That is the thing that helped the stock soar after they announced earnings last week. And anytime you see double-digit rider growth, and that is people using the app, people taking lifts a bit more, there's something that's obviously going to boost revenue and everything else. Now, I say they are tariff resistant. I said that, a little bit in the intro because I also said that Netflix was tariff resistant, and it was one of the best stocks at that point in the year for a while, and then somehow the president tweeted something about tariffs in the movie industry. I don't know if that tariff actually went through or whatever. So a lot has happened in the last 2 weeks, but in theory, these are essentially taxis, right? Ride-sharing companies. I don't know how you add a tariff or why you would add a tariff because there is no international element here, right? So we'll see, and hopefully that is the case, but it is relatively tariff resistant in that particular space. In addition to that, if you're somebody who is, let's say, a technical analyst, that is somebody who is looking at charts and you really care about how the stock is looking on that particular chart, yes, the stock has been down. We'll talk about that in our next point. However, as of today, it looks like the stock is about to what we call break out, meaning it might be time, if you get it today, that the stock is absolutely going to take off. Now, whether I'm going to take that as a sign to buy, we'll get to that near the end of the video, but some people may take this as a yes, this is about time. Now, the reason why I'm not, just jumping on that and that alone is because there is more to the story here, at least for me. And also, if I'm correct on this, when they announced earnings, because of that great news, the stock jumped 27%, or at least let's just say over 20% in case I'm wrong on the exact number, but it jumped over 20%. That one data point is going to throw your entire analysis off because of that one very good day. And then we always, the stock market has been up since then. So you take that one day, that's kind of an outlier. Stocks don't jump 20% in a day. That's not normal. That's going to throw off a lot of your normal charting and your normal tools that you use. So that's the part that kind of throws me off. But we did see a smoothing, right? A bottoming, if you will, for Lyft. So it does seem like it is starting to turn a corner. And again, from a numbers perspective, people using the service more, that's a fundamental thing. Whether the chart says it or not, people using the app more, them making more money, that is a good, solid thing if you're looking to own a business. And at the end of the day, that is what investors are doing. So that is one thing in the positive category. Let's look at the negative side of the equation. The bad thing, if you want to take a very long-term view, we talked about business ownership when it comes to owning a stock, is from 2019, the stock is down 80%. It's lost 80% of its value from that IPO spot. Now, I am somebody who, I've been doing this for a while. I say this multiple times. I've been doing this for 15 years. Got a lot of taste, got a lot of videos. We have more than 1,500 videos on this channel. I have not been on YouTube for that long, but between Facebook and the website and all kind of stuff and books, I've been doing this for a while. and I've always been anti-IPO. And IPO's initial public offering is the first time that we get to buy a stock for us. Now, if you worked at the company, sometimes you get an inside track and you get the pre-IPO price. The reason why I wasn't high on IPOs is because you get all the hype, and then usually, not all the time, usually bad things happen. Well, from an IPO, when everybody was hype about it, which I do remember this time, things fell off. And there was a good reason as to why things fell off. Number one, that's what usually happens, but also pandemic happened. They absolutely crushed Lyft, and it crushed every IPO that happened. I think Snapchat happened back then. At this point in time, I still lived in New York. I was right around the corner from the New York Stock Exchange, so I got to see all the things from even Zoom, Snapchat, Pinterest, all of those that IPO'd around that time. They all had like little cool banners and stuff. My son and I took a picture next to it, so it was real cool. However, you tend to lose your money for the most part unless you are holding it for 5, 6, 7, sometimes 10 or even 15 years. This is a part of that. So you would have lost your money. However, now this could be quote unquote the bottom, and this today in 2025 might make more sense to buy at this point in time. If we are taking the exact same approach that we take with every other stock, which I like to be consistent. I think consistency in your approach gives you some level of consistency in your results. So, like I do with every other stock, what do? I look at the last 6 months and look at the last year. It's not the only thing that we do here, but for consistency's sake, it is down negative 26% over the last 6 months and negative 22% over the last year. That's not a stock that I would typically look at. That's not a stock I would typically be excited about, and it is not a stock you're going to see on any of my watch list. And normally I would not give this stock a time of day. The only reason we're giving it a time of day right now is because y'all asked for it. So based on that alone, no. However, again, it does have the fundamentals. There are things growing within the company, including ridership and something else, that make this stock worth talking about and at least worth keeping an eye on for now. Quick time out. I know we've been talking a lot about investing today. However, if you don't know where to start or you haven't started yet, I have a free guide on how you can buy your first stock in just 20 minutes. To get that free guide, check out the link right here. All right, back to the video. Adding to the good news, and especially for tech stock and especially for a stock like Lyft, what has been one of the most important things for a company like this, and again for tech stocks in general, has always been profitability. How much money are you actually making? Because most of these companies have been losing money over and over and over again, and they just haven't made any, right? That they either didn't have enough riders, or it was just costing too much because you're paying drivers and we need to get robot drivers, or you have to move into other services like groceries or food, like, you know, Uber starts to do Uber Eats and things like that, or international growth, which is that is something that Lyft is doing, and they are moving pretty expeditiously. I think they opened up and acquired a company in Germany and really expanding in Europe, which is a good thing, and it is starting to work. For example, in 2024, they finally made money. Their net income was $22.75 million. Okay, so $22 million was their net income. On a broad scale, that's relatively small compared to some of these other billion-dollar companies. But again, that's pretty big. Now, when I looked at it, I saw one article that said this is the first time they've made a profit since 2019, but I actually didn't see a profit in 2019. So this is either the first profit since 2019 or their first profit ever. I may need to go back and dig through it again, but I feel like if this is their first annual profit, keywords annual, there are some quarters. There may be a quarter here or there, but I care about the whole year, okay? I want to see from top to bottom, did you make money that whole year? I personally don't really care too much about quarters. That's too much short-term thinking. But 2024, they were profitable. That is a good thing. Can they duplicate it? Will people continue to ride the app more, or at least consistently, and does it take off more internationally? That is something that I want to see. And again, between more riders being profitable, that's something that you absolutely want to see. And don't forget, everybody last year was complaining about inflation. Even though inflation was going down, everybody was talking about the price of eggs and all that kind of stuff. And the fact that people were still riding Uber, My bad. Everybody was riding Lyft more. That is something that is good for them. But going to the bad side, speaking of Uber, that is something that is negative. Great transition there. But it is something I did write down. They don't have a moat. That is something that truly concerns me. There is nothing to me that makes them that much different from Uber or just staying at home in some cases. So the two things here on the negative side is the moat piece, right? There is like Waymo and some other things, and people are looking at automated cars to replace a taxi driver. I don't really see that as being a possibility anymore. I mean, we're talking 10 or 15 years in my view, right? But I don't see that as being anything this year or next year or even the next 2 or 3 years if you are looking to buy this stock. But the main thing is if it's Uber, if it's some other rideshare company that comes along, what's stopping? Like, I have both of those on my app, on my phone now. I don't really care which one I choose. I just open the app, see which one is cheaper, and that's the one I go with, or whichever one says it's faster. Whereas if I'm choosing, let's say, Chipotle over Waffle House, it's a difference. It's one experience. One I'm gonna have to stretch because I'm gonna have to fight. The other one, I'm just going in and I'm getting my food and I'm leaving. Now, do I enjoy both? I enjoy me a good Waffle House, okay? But there's a different type of experience. And if you know what I mean, right? But there's a different space. They two of them, and you almost never will see a Chipotle right next to a Waffle House, whereas you always will see a Walgreens next to CVS. They almost the same. You really don't care between the two. And for most people, I think Lyft and Uber are basically synonymous. You heard me mix it up at least once, and once I go back and look at this video, I may have mixed them up more than once myself. So we'll see, right? So that is one thing. I'm not sure many people care between the two. And when you don't have a moat, you can be easily replaced, and that is a big concern. What is making Lyft truly special and stand out from not just Uber, but from the rest of its competition? The other part is the economic security and the safety of its consumers, not necessarily the app or the company, but its consumers. While I think that yes, they are tariff resistant, they may not be charged a tariff. They themselves may not be charged a tariff. However, if consumers start to feel the pinch from a tariff, what are the things they are going to cut out? Is Lyft going to be one of those things? That I'm not entirely sure. Is it considered something that is absolutely necessary, or is it something that could be cut? I don't know. Are people going to say, hey, I'm just going to stay home? Or is that the thing they're using to get to and from work, to and from school? I'm not sure. The way I'm thinking of it is, hey, it's summertime, right? My wife is going to a Beyonce concert. They may, and I think a lot of people do this, use Uber to get to said concert or festival or whatever. Well, if that tariff starts to hit and it really starts to bite, maybe you're not going to that concert. Therefore, you're not using that Uber or that Lyft, for example, second time, at least that I caught, and they're hurt in that way. How much of that is going to translate into the stock? That I don't know. And is it going to be offset by its international growth? Those are questions that I would be concerned. You might be able to get the answer by digging into their first quarter report, which again came out just about 5 days or so ago, depending on what time that you watch this video. Now, what do I think? Would I consider putting in a little bit of my money? Because the answer is no, I wouldn't put a significant amount of my money. Normally I say no more than 5% is my rule, just for my own portfolio. But for me, I'm not convinced. I'm not convinced enough. It feels like it's just too much risk for not enough proven rewards. Not only does it not have positive momentum for me, I would need to see, I need to see positive momentum at least on one side of this equation. At least in the last 6 months, it's been doing well, and it just needs more time to say that over the last year it's done X%. But I don't even have that to go off of. Yes, the fundamentals behind it, so I can see why someone would see that it's doing well. I can see why someone would believe in it. I get your logic. I just need more proof. And that's just how I see it. That's just how I see it. I'm someone who I need to, like a basketball player or something, I need to see you make it through the playoffs, beat a bunch of people first, and then I'll believe in you a bit more versus I'm gonna just draft you because I saw some stuff, right? So that's just how I operate. I need more receipts. This is the first year you've been profitable, from what I saw. You don't have the momentum yet. You've been down 80% over the last 5 years. To me, though I gave you 2 on the positive side and 2 on the negative side, looking at the return side of things, you got way more working against you than you do for you. I do think things are in the future are looking well for Lyft, but I just need more receipts. If you are looking though for other stocks that are doing well right now and may be a better fit for your portfolio, you can check out these stocks right here.